There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Now, welcome back to the Trading Justice Podcast. My name is Matt Justice. Boom. Thank you, Edgar. Now I feel special. Now I feel like I'm on fire now. It was just feeling so off right there, Tim, starting with some just random generic music. And yeah, it looked pretty and it was a good addition, but it just wasn't the same podcast. First, I got a question for everybody out there. Are you guys enjoying the podcast? You liking the podcast? They helping you out? Edgar likes them.
Well, to
awesome.
answer that, I'm going to point out the fact that you're the kind of guy that needs his mashed potatoes the same way every Thanksgiving.
That's true.
Or else you throw a fit.
It's true.
You got to have the same casserole dish.
I like structure in my life.
Any variety.
Yeah, I do. I like structure in my life. There's nothing wrong with having structure in your life, and there's nothing wrong with having structure and discipline in your trading either, Tim. So I'm sure we're going to get into a few different topics, guys. Like I said, this is kind of the first time we've ever done a live podcast. So it's a new experience. It's something we are going to absolutely do more of as we do more of these podcasts. Guys, I got to, first of all, we're coming into Thanksgiving, and I just want to say an absolute massive thank you to every single one of you who listened to the podcast, who has went out there on iTunes, ranked the podcast, and given us a nice little review. We hit over 25,000 downloads, ladies and gentlemen, on the podcast. Here. Thank you, everybody, for that one. And honestly, when we first started the podcast a few months back, I thought, maybe. In fact, I remember the first podcast. Tim says, "How many people do you think are going to listen to this?" And I just started laughing. I said, "If we get 2 or 3, I'm good with that." And the podcasts are now averaging over probably 600-700 downloads an episode. We're approaching 30,000 total downloads. It's getting out there. People are enjoying it. And you know what, guys? We have not even started marketing the podcast yet. It's all word of mouth, and that's a big thanks to what you guys are doing out there. And we're very, very thankful for that coming into this Thanksgiving. So with that said, Tim, what's on your mind today?
Well, I'm as you say that, the number one thing on my mind is that we still need a producer for the podcast, somebody that knows how to put the video in, the audio in.
Yeah,
so we're not listening to the same thing on double speed, Dean. So if anybody knows anybody out there in video production that would like to do some freelance work, maybe have
I'm going to blame Dean for that.
We'll see if it's a good fit.
Yeah, I'm blaming Dean for that. Yeah. That's typically a Dean problem. His mind works on double speed. See, that's why he was listening to that on double speed. That's how his mind works. Go ahead.
Well, I was going to say the second thing is on my mind is, are we going to share screens? Are we going to do some video stuff today?
Heavens, yes, Tim. Let's do some video stuff. Why don't you go ahead and share the screen and share Mock Trader, Thinkorswim. I got some live trades going on right now in the Forex market that I'm kind of managing. So go ahead, share your screen, and let's get this show on the road. What we're going to do today for the podcast is really kind of talk about the market, talk about trading in the market, but we want to talk more about what you guys are doing, analyzing what you're doing. And so just to make sure everybody is aware of what the market is, because I know we have some new traders out there. We have some old traders, some new traders. What we do at the Trading Justice Podcast and Tackle Trading in general is basically we talk about trading stock and options, currencies, futures, and like true traders, we'll trade anything as long as it makes us money. So let's go ahead and throw it out to the group. How is the trading coming, ladies and gentlemen, in terms of your own personal trading? What do you guys think? How's that trading coming along?
Awesome. Oh, by the way, Matt, I just realized that because we made the transition to use Adobe, which was a smart move, because we know this program, we can enable mic rights.
We can, and we're definitely going to bring Dean and Steve in. I want to bring Dean. Dean, are you ready to? You have your mic on, Dean? Awesome. I'm going to bring Dean on here. Dean, go ahead and test your mic out. Dean, I want Dean to tell us about one of the trades that he has recently made. It was a trade, I believe, on Netflix, Dean, if you'll correct me if I'm wrong. Turn up your mic just a little bit, Dean.
And while we wait for Dean to come on in here, I've brought up Netflix on the video. If you're listening back on the podcast, just the audio version, that's okay. You can go onto the website, tackletrading.com, and take a look at the coaches show. This is where the video portion will be played. I'm going to put this under the weekly coaches shows, Matt, so we'll have that up on the side. Well, Dean, let's do a quick audio check with you there, bud.
Yeah, how you got me?
Oh, that's much better, Dean. Hey, Dean,
I turned the microphone towards me. It was aimed the wrong direction.
Typically, that does help. It really does when you're actually talking into the microphone there. Dean, I want you to talk to the group about just very quickly the type of trader you are and the type of trader you primarily focus on.
The type of trader I am, I have been described as aggressive by you and Tim. I would agree with that. It suits my kind of cat-like personality, hunting. Not to mention the fact that, I think that options trading really lends itself to that. If you're just trading long stock on Intel or
AT&T,
for example, it's kind of hard to be cat-like when they move like a turtle.
This is true. And I would say Dean is very aggressive. I would say Dean is one of the most aggressive traders I know. And being aggressive is not bad, guys. That's not bad in any capacity. You have lots of different ways you can trade, lots of different styles that you can trade. Dean, one of your trades that you taught me.
Hold on. I got to cut in here for a second.
Go ahead.
I think Dean just earned himself a nickname.
He
said he was cat-like. I think we should call him the Big Cat.
The Big Cat? The Big Cat?
Yeah, he's the Big Cat.
Okay.
That'll work.
I don't know if that works or not. I'm gonna have to think about that. Typically, just give me a moment on that one. But I think it might work. It might work. Let's put it out there to the crew. Dean's nickname officially Big Cat. Yes or no? Yes or no? Dean being the Big Cat. Big Cat. What do you guys think? Yes or no? Big Cat Beckett. That actually makes sense. I actually kind of like that one now. Big Cat Beckett there.
I like all the.
Yeah, Steve likes it out there. He says he loves it. Hey, Dino, you've been on the podcast before talking about your journey as a trader, so I don't really want to focus in on to that one. But I do want to talk very quickly, Dean. Dean, there was I mentored you about 2 years ago now. Was it actually over 2 years now? It was like 2 years, 2 years.
It was
June of 2012, right?
6, 7, 8, I think, of 2012. That's how I remember all of this stuff very well because of my brain will not allow me to forget.
Yes, very much so. Dean, I tell your story every time I give a 3-day workshop. And the reason I do, Dean, is because it has stuck with me so much. It was one of the funnest mentorships I've ever done. And I've gotten to know you over the last 2.5 years. You're a good friend of mine, and that's how I consider you. I consider you a colleague as a trader and whatnot, and respect your opinion. And it's because the growth that you have put in over the last 2 years, the ups and downs and whatnot. But I remember one moment we were in a trading lab together. And you basically said to me, you said, "Hey, Matt, can I share my screen?" I said, "Well, certainly, of course you can." And he said, "I want to show you something." And you pulled up a risk graph. And he said, "What?" And you had sold a naked put. You had then bought an out-of-the-money strangle. And you said, "What do you think?" I said, "I don't know. What do you mean?" He's like, and you're like, "Well, I just made $8,000 on one contract." And I'm like, "What? You did what?" And I want you to explain to the group, before we get into what you did on Netflix here, I want you to explain how you made $8,000 on one contract on this trade that you call the crystal trade.
Yeah, I think it was Priceline, and that was the time that it worked the best.
Mm-hmm.
But it was also the riskiest one that I ever put on because I held it through earnings like I'm not supposed to do.
Yeah.
I held a short I held a short option through earnings, and part of what was happening there is the setup was such that you could probably call it gambling, but I had a really good feeling about how Priceline had moved, and this was in 2012 or something, and I had looked at all of the previous stuff about Priceline, their earnings moves, and one of the things that I noticed was pretty much almost every single time they had beat their expectation by a ton, and so their stock went up a lot. And so what I thought was, you know what, if I put on a short put and a strangle, and if it goes against me, oh well, then my max loss is at least mitigated by the long put that I own.
Yeah.
And so when the stock went up, and I realized that, and part of it was that I've just made a mistake too, which was that I didn't realize when Priceline was having its earnings, because it had a question mark in Thinkorswim. And so I'm going, well, come on, figure it out, because it was getting close to the end of earnings, and so it changed it like to the next day, and so I'm kind of going, well, that's great.
Yeah.
So finally, we just trade on, and the next day I made I want to say it was like $7,500.
Yeah.
But it was pretty much free money because the short put was nothing. I had the strangle for a total cost of maybe $1,000.
So
I lost $500, or no, I lost like $700 or $800 on the other side. Not a lot. Priceline was trading a lot lower in 2012, and on the other side, I think I made right around a couple $1,000s off of the long side. So the total on that was a lot more than. But the one part of the trade, the short option, I think was right around $7,500 is what I made. And just walked away, just said, "Okay, that's good. Close it."
Well, and,
happy with that.
And the genius part of this trade, and even though it was born out of some mistakes, but you still make money. That's the best kind of money to make, by the way, Dean. It's the one you make a mistake on and still make money. But basically what he does is he would sell a naked put, and let's say he sells the naked put for $1,500.
Nice.
There's the big cat right there, Dean Beckett. It's got to be homebrew though, T. It's got to be homebrew. Yeah, it's got to be. He's from Portland. It's got to be micro. But he sells a naked put for like $1,500. Okay, a fairly aggressive one. And then he goes and he buys an out of the money call for about $750. He buys an out of the money put for $750. If Priceline goes up, basically the value of the naked put will decrease. He will pull that trade off prior to earnings. So let's say he makes $1,000 on that trade. All of a sudden, what's his net risk total? His net risk is only $500 to hold a long strangle through the earnings gap. What happened on Priceline is Priceline basically gaps up, which diminishes the value of the put, but the value of the call is now $8,000 for a grand total of $7,500. And when I first saw this trade, I was like, okay, when you build a trade, what your job is to really kind of rip it apart. I mean, that's your job as a trader, is to really rip it apart so you can back test it and make sure it works and work out all the kinks and everything along that. You're not doing it to rip on the trader. You're doing it to work out any of the detail that needs to be worked out for the strategy. And I was looking at the trade and I'm thinking, where's the risk here? And ultimately what the risk is the value of the naked put. If the value of the naked put decreases going into earnings, you're going to show a loss going into the earnings gap, and you can either just take that loss because the value of the call option, the long call is going to offset the long put, so you're going to make a little bit of money on that long call, and so it's going to offset the naked put. It's an absolutely amazing trade, and basically what Dean did here on, and it was on Netflix just recently. Tim, pull up Netflix instead of the Priceline one. On Netflix, and he does this every earnings and it's only on the big dogs, right? The Netflix, the Priceline, the Googles of the world, correct, Dean?
That is right. The ones that are the big movers, or they have a high chance of an outsized move. And by the way, Apple does not do that anymore. I tried that the last 3 times with this kind of a strategy, and it has not moved a bit. So I'm kind of like, that's a Dow stock. Get it out.
It's now a short strangle on earnings. That's what Apple is now. It's just not going to. Yeah, and so on Netflix here, what Dino did, or the Fat Cat, what the Fat Cat did was he basically did the same thing. He pulls off the naked put prior to the earnings, and all of a sudden the next day I get an email, and basically he had posted in the Google group, I just made $24,000 on one contract. And actually what the email read was, I'm back. That's all the email said. I'm back. $24,000 on one contract on Netflix, because Netflix gapped down 100 points. And I was just like, oh man, I'm so jealous. So jealous, Dino. This is a great, great trade. Well played, sir. Love it. But I'll tell you, the most impressive thing about that is that Dean, through his own trading, he had just started messing around with the risk graph to see what worked on earnings, and he created a strategy that he's going to be trading for the rest of his life. Well played, Dino.
Well, let me ask Dean this. Dean, we come from a teaching perspective. We're mentors. We're educators. You're starting to get enough experience to where I think you should be doing that sometime soon, if you've not already been doing it a little bit. Would you try to teach a beginner that strategy, or do you think it maybe should be reserved until you understand the risk graph a little bit?
I would think that the wise choice there is to wait until somebody has more understanding of trading. But yeah, the reality is that it's not just like Scott Stewart says. Trading is simple but not easy, or easy but not simple, or whatever. And Scott Stewart's a great trader. I don't know if he would ever do something like that, but I know that one of his favorite trades was straddles and strangles. He did them all the time.
Yeah.
He would never do this trade. Yep. I know Scott very well. He would never do this trade. He's a very conservative trader in terms of naked puts and short strangles. I mean, that's what he cares about, is just positive cash flow. This is a big boy trade, in my opinion. It's one of those trades where you got to understand volatility. You got to understand market maker moves and expected gap ranges, and how to manage volatility crushes. And it certainly is a big boy trade, and I would not recommend it to a new trader. Somebody with experience in trading earnings seasons and whatnot, though, this is something that they can put into their arsenal fairly quickly.
Oh yeah, I know Steve could easily pull this off.
Oh yeah, guaranteed.
Yeah, you guys are. Yeah. Anybody got any questions for Dean while we got his audio up? I do want to bounce around the room a little bit.
Paul had a question. Dean, how long did you start in terms of your trading career?
How long ago? Okay, well that date that I have listed there in the chat is when I signed the contract for Tiger, now Rich Dad Education. Mm-hmm. And the reason why I know it so well is because it really literally changed my life, and I can't even think of where I would be now. Probably working somewhere.
Hey, which by the way, Dean doesn't have a job. That's why he says he'd probably be working somewhere. Dean, when you started with Rich Dad, you didn't have much experience as a trader, right?
None. I didn't even know what a call it or put was.
Yeah, and you just decided you wanted something different, correct?
My friend Vic had signed up for the Stock Success Intro to Stock Success course, and he was just going to pay for the whole thing. He had already paid for it and didn't know, and had asked amongst my group of friends and his group of friends, because we all share basically the same group of friends, and nobody was interested. And so one day we're playing D&D on Thursday, and he says, "Do you want to go to the stock thing
what's D&D
tomorrow?"
real quick, Dean?
D&D, Dungeons and Dragons.
Dungeons and Dragons. That's my boy right there, Dean Becker, the Fat Cat. I love it.
I know. I'm 45. I still love to play.
I don't care. I don't care.
Big cat, man. Big cat, not fat cat.
Big cat.
Big cat.
Fat cat. Big cat. Big cat. Big cat. I told you it's going to take. I've been calling him Dino for 2 years. It's going to take. It's going to take me some time to get to the big cat.
Whatever you want. as long as you don't call me late for dinner.
That's right. I like it.
To answer the other question that you just asked about when did I actually start trading, like real money,
Mm-hmm.
it was probably about 6 months after that date
Mm-hmm.
where I was trading regularly on real money.
And after you did your mentorship, how many trades were you making a week?
I think before I was making anywhere between 10 and 15 maybe, and then after that it went up substantially. I think right now I'm actually back down to where I'm making fewer trades.
Mm-hmm.
But I'm working on using up more of my capital, especially when I get towards the end of the week, towards expiration. Then I'll sell some naked puts or calls and collect premium and wait for them to expire at the end of the week.
Yeah.
I'd say probably about at my height, maybe 30 to 40.
Yeah, I think it's somewhere in between that 30 to 40 range. And that's why I said a very aggressive trader. And Dean, I hesitate to even ask this question because I don't want to set a improper expectation for everybody else who's just kind of starting their journey as a trader. But right now, how many hours do you spend in the market every week?
Well, I wake up in the morning with the market, and unless I take a nap sometimes, which I've been doing recently because holidays and other things are kind of starting to kick my butt, I'm pretty much logged in the whole time, and up until recently have been watching it all hours of the day that it's open.
The life of a trader right there. I wake up at the market, I take a nap, I close the market, done. I love it. It's fantastic.
Dino, any holiday traditions you want to share? We got Thanksgiving tomorrow.
A Thanksgiving party on Saturday. Since most everybody does their own family thing on Thursday, I'm kind of the mindset Thanksgiving meals are too good to have just one of them a year. So since we travel on Thursday to go to Tacoma for Monica's half of the family, they have a tradition there, and then we come back that evening, which it's only like a 2.5-3 hour drive for us, so it's a little long, but we finish cleaning the house and doing the initial prep on Friday, and then I have a giant party at my house on Saturday.
I like it.
You guys can come. But I know you're in Salt Lake City, so.
Hey, Dean, I've been telling Rich Dad to get my butt back up to Portland. That place is too good not to visit at least once a year.
And you know what? I want to go to some symposiums.
What? That's exciting for the symposium right there.
I actually love the symposiums, Matt. I went down to one in Las Vegas where Steve was. We podcasted about this. Steve and I had a conversation the other day about it as well. And it is a lot of fun. It's not all traders, Dean. A lot of them are real estate guys and gals. And it's all kinds of people. I love it too. Just
a bunch of investors doing what investors do. Get around, talk shop, network and whatnot. They're actually very cool. Yeah, he's from Portland, and I'll tell you, I ranked my top 3 cities in the U.S. Because I visit quite a bit of them. Austin, Texas was number 1. Love Austin, Texas. One of my favorite cities. Love that city.
I've never been, but I've wanted to go there.
Oh, it's a fantastic city. And then Portland was number 2. And Portland, the microbrew in Portland, the scene, the laid back mentality, the downtown Portland area where it's like it brings you back to 1975. It's just
I like that.
I know I love Portland, and then my third one was a tie because I cheated. It was my list. It was a tie between Washington D.C. and Chicago. I love those 2 cities as well. So nice, Tim. Good video there.
I could look up cat videos all day. I think I might do that for an hour after the podcast.
You got some issues, my friend. You got some issues. Okay.
All right, let's. I brought Steve up. Steve, you got your mic on today, or
Steve,
you at
mic.
work? Can you chat?
Dano, thanks for sharing. I'm going to move you down, brother.
Yeah, no problem.
And while Steve's coming on, Robbie said, I recently came across a quote, success comes from bouncing from failure and failure without loss of enthusiasm. Obviously, you figured it out and did well for yourself. What keeps you going? Well, I just moved him out of the participant tab. What keeps him going is money and freedom. I'm sure. That, and honestly, Robbie, once you learn how to trade, you just love it. You just love doing it. You love taking advantage of it. It really is. It's addicting. It's just, it's like Dean says, it's a ton of fun. I mean, I can't tell you the last time I had a boring day in the market, even if I was losing. At least that gave me something to bitch about for a little bit. All right, Steve, do you got your mic up there?
Hey guys, how you doing?
Doing fantastic,
Good,
Steve. What's up, brother?
Doing pretty well. Hey Tim.
Hey man, happy Thanksgiving in advance.
Oh, thanks. Happy Thanksgiving to you guys too.
I think the group probably would want to take the chance to ask Steve a few questions. We've had Steve on the podcast a few times. Everybody knows Steve's story. If you don't, go back and listen to some of the old podcasts. Does anybody have any questions for Steve? And Steve, while those load up and get fired up in the chat, why don't you just kind of update us on what you've been working on?
Oh yeah, no problem. Hey, I wanted to tell you guys I'm working on. I'm actually going to spend some time today backtesting a new trade.
Oh,
I wanted to show it to
are you ready? Are you ready to share it?
Yeah.
Let's do it.
So
Let's do it.
Could do you guys mind pulling up a chart of?
Well, I can bring it up on mine, or if you wanna drive, you can bring up your screen.
No, I think it would work fine with just yours.
Okay, let me get it back up. Hold on. Got it.
I'm thinking if you can pull up a chart on Thinkorswim with any of the high beta stocks, like maybe a Tesla, Amazon, or something like that.
GoPro.
Okay, and then if you can do Control E, and then let's remove the indicators, but then put in the Bollinger Bands, and then put in the RSI. We're going to have to adjust the RSI settings a little bit.
And while Tim's pulling those on, guys, Bollinger Bands is just it's an indicator we use to kind of assess, the average mean, the overextended, overvalued, undervalued type areas and movements on a stock. RSI stands for Relative Strength Index. It compares upward movements in price versus downward movements in price. Really good for breakout patterns, whether it's bullish breakouts or bearish breakdowns. So just want to quickly explain what these two are.
Now, Steve-O, I got Bollinger Bands up. You want the 22 standard deviation, simple moving average?
Yep, that's fine. And then the RSI, I think you're okay, but can you double click on it so I can see the inputs? Okay, 1470.30 close while there's okay, that should be fine. So here's what I'm thinking. I've noticed that when you get a stock that closes outside of the Bollinger Bands and it's actually at the top or bottom of the RSI Wilder, that's an indicator to me that the stock is going to pivot and turn around.
Okay.
So the RSI
real quick, Steve, explain that one more time.
So you see this one, I don't know what it is. It's right around September 22, it seems like.
Yeah.
You go up, you'll see that it closes outside of the upper Bollinger Band. It's at the top of the RSI Wilder.
Okay.
So I'm looking for the combination of both those two. And to me, that's an indicator that the stock is either overbought or oversold. And it's an indicator to me that there's a potential pivot coming.
Well,
so what I want to do
in this case,
past 3 years across various stocks to see how well that holds up.
How's the back testing going?
Well, I'm going to start it later on today, but this actually helped me just recently when I was looking at crude oil, because it was coming down pretty hard, and I was trying to catch the pivot, and I actually caught I caught the momentum slowing down. I was able to add on some naked puts at a pretty good premium that ended up expiring worthless. So
First of all, I want to
brain thinking.
Yeah. Go ahead. Go ahead. No, you got me on interest, man. I'm excited to talk about this. So go right ahead. Finish your thought.
Yeah, it just got my brain thinking that, hey, maybe this is an indicator that can help me, because unlike Dean, I'm actually super conservative when I trade, to the point where just buying a long call or buying a long put is really difficult for me from a psychological standpoint. And this is something that I'm thinking it might be able to help me get over that.
Well, I want to talk about a couple of things here to kind of set the stage a little bit. Number one, back testing. Explain that to the group. I'm not sure everybody will know what that is. Kind of talk about the theory, the idea behind back testing, and how you go about it.
So I love back testing. That's actually something I learned from you, Tim. So what it is you take an idea and a theory. And a lot of times, if you just have an idea and theory and you begin trading it immediately, you don't really know what are the chances for success based upon past history. And so you may not have the confidence that you need going into the trade. So when you back test it, you take your theory and you look back at the past behavior and you apply it across different stocks and different situations, and you take notes. You say, okay, I entered on this date under these conditions, and by following this rule, I ended up with a certain outcome. And you just keep doing that over and over and over again, and pretty soon you have a very good sample size. Once you get that sample size, then you can run all sorts of analyses on it and determine what's the percentage of success, what's the lowest, the biggest loss you would take, what's the biggest profit, what's the average profit, things like that. And that really helps build the confidence in whatever strategy you're trying to implement. Yeah,
I remember that one of my most extensive sets of back tests I ever went through was about 2010 or 11, probably when you were out here mentoring, maybe in between the two mentorships. I went through probably thousands and thousands and thousands of trades because I believed in this idea that I thought could produce a really good trading strategy. And after thousands and thousands and thousands of numbers that I was crunching and practicing, it just didn't bear out any results. It was not consistent enough to say it's a good indicator. And one thing I've learned about back testing over the years, for me, is some people would see that as, well, you must have just wasted your time then.
No.
Not so. You always learn something. Even if it doesn't produce the result you were expecting, you gained knowledge about a specific area of the market that is very important. I'll give you a simple back test I made a group do once, Steve. I had a student tell me, we were looking at a stock, and they said, well, I wouldn't buy that stock right there because the stochastic is over 80. And I said, well, have you back tested that to know that that's actually a good thing to follow? He said, no. So I made him go back 200 examples on 5 famous stocks, Apple, Google, all of them, and log the data of when a stochastic hits over 80 for the first 3 to 5 days. And actually, there's not a correlation between being over 80 and a stock dropping right away. In fact, they usually keep going up. So we should
Tim,
never assume.
I've back tested stochastics quite a bit in my career, and same thing with MACD, RSI, and all of them. And back testing on stochastics, there is zero correlation between a stock being above 80 and it going down. Stochastics more than likely will stay, once it gets above 80, will more than likely stay above 80 for weeks, if not months. In fact, when a stock gets up, if a stock crosses 80, that in terms of back testing is a better buy signal than it is a sell signal. It's when stochastics ultimately crosses down under 80, and where that mentality comes from is they don't understand the Lane stochastics theory. They don't understand what stochastics actually reads. Stochastics does not, even the actual understanding of the indicator stochastics does not say to sell if it gets above 80. That's not what it says. It says you sell when it crosses down below 80, not when it gets above 80. It's because, you know, when you look at where a lot of people started learning how to trade over, like just your normal individual investor, it's because at some point in history, whether that was 5 years ago, 10 years ago, 20 years ago, they went to a 3-day workshop or some type of seminar, and they had some speaker up there say, if stochastics gets above 80, you sell. That's lazy, and that's not what traders do. And it's in that old seminar mentality. That's a dead mentality. That old 1998 mentality of when a lot of these seminars came to exist, it doesn't work any longer. And it's because a lot of that was not based on actual back-testing trading systems. And that's what's different between what we're doing at Tackle Trading and what we do at Rich Dad compared to what everybody else does. Everything we do is back-tested based on trading principles, not based on sales principles. Do you understand the difference? You got to take yourself off mute first.
Well, I don't know if you were talking to me or the group or Steve. That was kind of a rant.
Well, it's a frustration I have, to be perfectly blunt, that, you know, people think that they can just, if stochastics is above 80, this. If it's under 20, this. It's just, and also stochastics is not even a short-term indicator. Stochastics is a long-term indicator. It's an investor's indicator that most people aren't even using it in proper way. So it's a little bit of a rant.
And I think the key here, guys, is that here's a trader, Steve Wong, who we've had on our podcast, a friend of mine, Rich Dad Hall of Fame. He's kind of a big deal. I hope your ego's not getting too big, Steve. But
are you kidding me? Did you see
out new ideas.
Did you see what Steve wrote in the chat just a little bit? He's kind of a big deal in the trading justice community. He said that. So yeah, he's getting a little bit of a big head out there, and I like it. Steve's a damn rock star. Are you kidding me?
I just typed it in.
You know,
you gotta have fun. Oh, that was Dean. Oh, I should have known better, because Dean would say something like that. Steve would never say something like that. In fact, when Steve's been talking, he's so quiet in his talking. I've had to turn up the audio for the recording when he talks versus when you talk, Tim, because you're kind of a loudmouth.
I'll take it, and I'll admit it, but I will hit that point one more time. Guys, it doesn't matter how long you do this. You don't stop trying to examine this stuff from a critical eye.
Yeah.
Back testing, putting down numbers, thinking about new ideas, trying out new strategies. Every good trader I know, Matt, has a virtual account and a live account.
Absolutely.
It doesn't matter how long they've been trading.
No, I agree 100%. You got to virtual trade, and guys, whenever you build new strategies like Steve did with his RSI and his Bollinger Band, or what Dean did with the crystal trade, you got to get out there and back test it. You got to make sure it works, because just because it works once or twice or 3 times doesn't mean it's going to be a consistent earner for you as a strategy. And so I love that mindset of both of them out there. Ladies and gentlemen, you've been listening to the Trading Justice Podcast, presented by Tackle Trading, and we're here with a live podcast with an absolute amazing group of students. Once again, guys, a couple of questions I have for you before we get going with some other issues. Are you guys enjoying the Forex Trading 101 series I'm doing over there at tackletrading.com? You enjoying that series? Is it helping you out? Have you started virtual trading? Awesome. I love doing that Forex report. I'll tell you that right now. And kind of why I started that Forex report was I do that every week anyways, in terms of analyzing my own Forex stuff. And so I decided, well, I might as well just shoot a video out to the people over there at Tackle Trading, and it became known as the Forex Trading 101 series. And it's I'm having a lot of fun, so I appreciate you guys liking it out there. Do a blog, do a video, also do the Forex report every Monday. I'm still extremely bullish dollar versus yen, just FYI. That won't change. That might not change for
Steve,
the next year.
do you track Forex very much?
No, I don't know much about it.
It's the
well,
number
maybe
one.
Go check out the 101 series.
Yeah, Steve, what's wrong with you? Seriously. You're going to be a contributor at Tackle Trading, and you haven't watched my series yet? Oh, man, I'm offended by this.
I need to do it. That's true.
Steve, just a couple things, just to kind of wet your ear a little bit. It's the number one trading vehicle in the world. It's literally, if you added up every market in the world, it would not even come close to the liquidity in the currency market on a daily basis. It's the most consistent market in the world. It's a highly technical market. It's a 24-hour market. We don't have to deal with gaps. News is automatically priced in. It is the most leveraged tradable instrument in the world. You can take $1,000 and you can control $50,000. And so for per standard movement in the currency market versus any market, you can make more money in that market than any other market out there. It has the most consistent cycle in the market of any tradable instrument on a daily basis as well. And I'll tell you the same thing that my Forex mentor told me. If you make a lot of money in trading options, but you don't know how to protect that money in the Forex market, in 10 years you're not going to have any of it. And so I truly do believe the importance of everybody, and it doesn't mean you have to trade Forex, guys. That's not what it means. It means you have to understand Forex. You have to understand how to trade Forex, how currencies are evaluated. Because you can trade Forex in any market. You can trade Forex in the stock market, the options market, the futures market, or the foreign currency market. And so that series, what I'm doing, is primarily in the Forex market, but you can take those principles and you can trade different instruments in any marketplace. Thanks, Robbie.
And I think Dean has a good point here, is that even if you don't trade Forex, you need to check it because it helps you gauge what's going to happen in the equity markets, which affect all of your option strategies. Just to reiterate what you were saying there, Matt, even if you don't use Forex as your trading product or vehicle, it is a wonderful indicator, because of intermarket analysis and because of those relationships. Well, Matt, this is fun. I'm enjoying this. We've got a whole crowd here. Any particular stocks you want us to look at, Steve, or any thoughts before we bounce you down?
No, the one I'm looking at right now on my screen is Tesla, and by the way, just to go back to the Forex, the thing that you said, Matt, that got me was that you're saying it's the most liquid.
By far.
That's what caught my attention the most, based on what you said.
Yeah.
And, boy, I love that. Because you'll be able to get in and out of positions so easily. And me as a day trader, that's exactly what I'm looking for.
And honestly, Steve, it's not only the most liquid, it has the most narrow bid-ask spreads. You don't pay a commission in terms of trading currencies like you do in options. So you can save on some commissions there. And the currency cycle, as a day trader the currency cycle could be something that you could manipulate. And there's some awesome trades in the currency market. For example, the news-based trade that I call the roller coaster trade, or the go-to-bed trade, or the bank open trade. These are some very consistent currency trades, and it's something that I think as a day trader will enhance your portfolio and your skill set. It really will. So check out that Forex series, and I'm sure we'll talk offline about it as well. Hey, Tim, I promised Gino we would do something. As many of you know, Gino is one of the coaches over there at Tackle Trading with us. He's one of the founding fathers of Tackle Trading. That would be Noah, Gino, Tim, and myself. And Gino's scouting report this week was 12 for 12, guys. 12 for 12. All 6 bulls made money. All 6 bears made money. And Gino said he would be very upset with me if I did not give him public accolades for the quality of his scouting report that he put out there. Think about it, guys. 12 for 12 on his scouting report this week. That is amazing. And so, Gino, when you listen to the podcast, brother, you are one of the greatest traders I know, and we are all standing at the feet, kneeling at the feet of a trading genius. So thank you, Gino Poor, for that.
So those of you who don't know what the scouting report is, Gino puts that out every Saturday. It's for pro members. Gino's a hedge fund manager in Southern California, one of the members of the tackle trading community, like Matt said, one of our founders, one of our colleagues, and friends. And guys, these are hand-picked trades that you can go and take a look at on the weekends. Now, you got to execute. Noah and I were talking about this yesterday. Some of these trades, when managed correctly, you're going to go 12 for 12. Like, I can imagine some traders who don't know how to put the stops and targets and all the little things in there, that they might have missed one or two, Matt. And that's just skill set that you've got to develop and get there to where you're managing it and thinking like Gino. Maybe that's a tagline we should use. We should start a Twitter, a trending Twitter hashtag.
Think like Gino?
Think like Gino, or trade like Gino.
Wait a second. Hold on.
But yeah.
Okay, hold on. I'm glad you brought that back, because when you said think like Gino, I've had some very weird conversation with Gino before. Trade like Gino, definitely. Think like Gino. Let's pull back the reins on that just a little bit. And the scouting report, guys, I know, we love Gino. Gino's one of our good friends. But the scouting report, what Gino does, unlike a lot of other picks out there, guys, Gino trades every one of those. Every pick he puts on the scouting report, he trades. I don't trade every one of them, but every Sunday night, I'll go through the scouting report. I'll pick the ones that fit what I'm trying to do, and I'll trade those. Because if I have an expert hedge fund manager like Gino Port telling me, here's my 12 trades I'm looking at this week, you're damn right. I'm going to go out there and I'm going to do the ones that fit what I'm trying to do out there in the market as well. That scouting report is just, it's honestly, it's one of the most undervalued things that we have over there at Tackle Trading. You've been listening to the Trading Justice podcast presented by Tackle Trading. We got to get that out there for the recording, ladies and gentlemen. For the rest of the time, I want to throw it out to the group, and I want everybody to give me one stock that they are looking at, and just tell me, give me the stock symbol. And if you're looking at a long trade or a short trade on it, and Tim and I are going to analyze that to see how we would approach that stock if we would do absolutely anything at all. So everybody put one stock that they're looking at right now. And so just like Edgar just did, Disney long. So that would be, what we do. So let's pull up Disney here. Now everybody else, don't be shy, guys. There's no wrong answers. This is all about growing and getting better and analyzing as well. So let's first look at Disney here.
Should we do this rapid fire, Matt?
No, this is the very definition of rapid fire here. So Disney long. So let's go ahead and look at that, Tim. And I'm not going to get on my soapbox at Disney. Everybody knows it by now. They're taking over the world. They are the evil empire. Let's look at this right here. Tim, how would you approach Disney making money?
Disney's a good stock for a conservative account. There's no question about it. You can even play very liquid options. I'm sure it's penny options. In fact, I can confirm it. Thinkorswim here, just two shakes. DIS. One thing I like about the Thinkorswim stuff, Matt, is you can check and see if there's a dividend real quick. No dividend on Disney. We can look at the option chain as well. Penny options on the chain, very liquid, tons of open interest and volume. It's bullish, there's no question about it. It's about to break out. It's got some pretty good resistance here at 92 heading into the weekend. I wouldn't buy into Thanksgiving weekend. I'd probably reassess it on Friday and wait in terms of timing. In terms of opportunity, it's there, yeah.
Well, when I'm looking at Disney right now, Disney's got a doji right there at 92. That is a resistance level for that. If you are going to long Disney right now, I think that would be a mistake coming into the holiday weekend. You got an opportunity on Friday. The market will be open a little bit. If you see a close on some type of momentum, that's a good opportunity to get into Disney. It is certainly a viable option, viable in terms of long stock or shorts or long call. But it's got to break out of that 92 level first on some volume. I mean, look at the volume today on the doji candle. It's no volume today, and let's wait to see a little bit of a movement up first with some volume, and we certainly could get that fairly soon here. So we're a wait on Disney, but only a wait 1 or 2 days. Dish long, DISH, Dish long.
That's easy, one extra letter, and we're at Dish long, except then Dish, there we are. Ooh, Dish Network. I should buy Dish Network just so I can feel better about my bill I send to them every month.
You know my style.
Actually, I have DirecTV. I don't even know what I'm talking about. I have DirecTV. See, I don't even know who I pay the money to.
Well, you know, that's one of my ways I find to trade. You know, in terms of looking at the bank statement. Where's my wife spending money? Wherever she's spending money, I'm going to trade those stocks. Okay, it makes me feel like she gets Amazon stuff for free. It's therapeutic for me. So looking at Dish here, let's pull up Dish. Dish is when you're looking at a trend, guys. There's retracements and breakouts. There's three basic trends. There's three basic patterns within a trend. You have initially the breakout that occurred at 67.5. Then you have what's called overextended. Overextended is when the stock moves up past the point where it typically has in the past. What that means is the stock will now start to come back down in price. So when I'm looking at Dish Network right now, I'm saying, yeah, it's got some momentum behind it, but for how long? I want to wait. I want to be patient. Let's wait for it to come back down in price, and then let's get into it on the when it comes back down. Tim, you see anything different?
Well, first of all, I see Noah Davidson, our colleague, friend. Hey, Noah, nice to have you. Check your audio here in just a minute. We'll bring you in. We'll fill you up to speed. I love the 1, 2, 3 thing that you teach a lot, Matt. And, you know, I think it's overextended. To me, that's where we're at. It's definitely bullish. It's to watch this candidate, chasing it down up here. The only way I could approach something like this at a high would be with a real, you know, creative risk graph, like a ratio back spread. Something that if it did come back on me, I was protected.
You know, one of my favorite trades, guys, is a protective call right. And it's, I mean, just technically speaking, if you were to do a cup and handle type forecast or projection, it is range up. It's exactly where you'd expect it to reverse. Because you look at what, support at 57.50, resistance at 67.50. So you're talking about 10 points. Well, now, look where it's trading now. 77.50-ish, so it's range up. If you were to change time frames, it's slowing down. Look at the options chain real quick. And let me see the intrinsic value on the options. Okay, and if there's any extrinsic value.
No, real quick, we got 5 minutes left in it. We're in rapid fire. Okay, so
rapid fire. Then what I would say is look at the in-the-money calls, and if there's more premium than there is loss in the stock price, you can use that. You can buy the stock, and if it drops, sell the call.
Awesome, love it. Herbalife, awesome. HLF. Let's start with Noah on this one. Rapid fire, first instinct, Noah. Put it on the daily chart.
Momentum W. So I'd go weekly chart, slowing momentum W pattern. I would be a bit of a contrarian on this one because it's in a primary trend zone from the weekly. If you go connect those major pivots, it's in a buy zone. But recent trends down, so you got to be cautious with that. I like to do credit spreads on this, like bull put credits down below support. Even though it's in a bearish pattern, if you bring back the weekly, I think it's primary bull trend.
Yeah. My take on it, short-term downtrend at resistance. I'm going to short the stock on any downward movement in price. It's an upward movement right now. It's a swing trade on the short side. If you're looking at multiple time frames, it's going to give you a little different picture. Swing traders, you know, short-term downtrend at resistance. Let's go ahead and short that, but not today. It's got an upward movement in price. We only short as on a downward movement in price. Tim, pull up First Solar FSLR on the short side.
Ooh, Noah?
First Solar, my take on it is it tends to follow oil. Solar stocks tend to track oil, so I'd check the oil sector. Bearish retracement, but slowing momentum. Target of 45.
Oil's bearish, Matt?
First Solar, slowing momentum. If you were going to do something, you would target just the previous short side. Very similar to what we're seeing on Herbalife and, like Noah said, on oil. Downward movement in price. I think an aggressive trade on this is justified. Meaning any downward movement in price, I'm going to long put that and target 47.5.
Interesting. All right, next, Clack.
I will go first on this one. Pull up the chart there.
There you go.
Breakout yesterday on decent volume, little slow momentum. I think that's a breakout. Had a little bit of retracement prior to the breakout. That's a tiny bit of a cup and handle continuation pattern. I like the breakout here on KLAC. I think it's going to continue to move up.
Noah?
I think your downside risk is just the resistance. So
Exactly.
I would not hesitate to take a bullish position, even though it's showing like it might pivot. It's the distance to your old resistance. I see that checking off that. So I would say downside risk is minimal. I like breakouts, especially in the sector. Tech sector has been strong.
You know, I think it's a really good point, and I'm loving rapid fire. We're going to do this every coach's show, I think. You know, set the stop and the risk at the old resistance point. That's technically sound, right from these two guys, which are technicians. When you guys talk technicals, I just kind of like to shut up and listen. Let's see, Tesla Iron Condor from Milena. You guys neutral on Tesla.
By the way, Melina is one of my favorite people of all time. Just gonna throw it out there right now. Favorite people.
She can sing and dance too.
Oh my Lord!
Awesome.
No, remember being in LA?
I do. I remember Matt singing along at the top of his lungs with his eyes closed.
I'm not.
So that like from his soul.
I was in his zone. I'm just gonna tell you that right now. Okay, Noah, go on Tesla.
I actually have a longer upside position on this. I have a back ratio on this bad boy, looking for it to run over the next several months. Near term, it's consolidating between support and resistance, and my trade's not going so well. So long term, I think it's moving up. Plus, I want a Tesla.
So do I. I love Tesla. It's one of my favorite. It's one of my favorite companies. I love Elon Musk. I have a huge man crush on him. Short term, that's a symmetrical triangle. If you're going to go directional, you got to wait for it to break out of the direction, out of the symmetrical triangle, either up or down. You got to be willing to make money either way on it.
I'll throw my
got a back
2 cents
ratio,
on this one. I have no problem with an Iron Condor if it's low enough delta, Milena. I see exactly what Noah's seeing with the developing trend here, higher high, higher low. There is some complexity in the chart. If you're going to go low delta, if you can manage the risk, hedge it, adjust it, do something with it, I'm okay with that. Let's see here. What else? Where's next, Matt? I'm having a hard time keeping up. People are loving this.
DE, John Deere, DE, short strangle yesterday. Oh my goodness, Ken, I love you. Short strangle. Let's look at this.
No, you missed my man Paul. I gotta throw into Paul. We'll come to DE next. AUY.
Humana Gold. Gold sector in general, possible reversal pattern, but it's been in a downtrend. And it's hard to understand why gold and precious metals have been, kicked down when you consider what's going on quantitative easing-wise still. But
here's my take on it. I went short silver yesterday, pretty heavy. I think commodities are going to get their tail kicked over the next little bit. I would not buy a gold stock in any capacity, not even Rand Gold, until we see gold actually show some strength over longer than a week. So I'm
strengthening dollar. Yeah.
It's a strong dollar equals negative commodities.
This is what I love about this group, is that we can have different perspectives. 30% ROI against a 35 delta on a stock that actually makes money. This was a recommendation I gave to Paul for a naked put to start practicing on them today. And you guys are trashing on me. I like it.
It's a horrible trade.
It's a horrible trade. Reversal potential. Drop it out to a big weekly. Go to a monthly perspective. Go monthly on that bad boy. And if you look back from a big
that weekly is not.
It's a big support zone.
The monthly is the monthly is, and you're going to see now that it's under $5, you're going to see a little bit of less of the short on it. I see a lot of risk in going long any commodity-driven stock right now.
Attention Kmart shoppers, we've got a blue light special on Humana Gold. I mean,
it's a cheap way.
So
it's cheap.
Your discount shoppers do step in.
We can't hit all of them. Pick one more.
What do we got?
Was it Deere?
I think it was DE.
Well, we said Deere.
DE short strangle yesterday.
Monthly ascending triangle.
Yeah, I saw that too.
Earnings.
Sell volatility on Deere.
Yeah, earnings came out, reported earnings, short strangle on that. Let me, real quick, just giving a brief little gap here, Mark and Meg. Go to the trade tab real quick, Tim. I think it's gone, but I'm not sure. Yeah, it's gone.
MMM.
Yeah.
Well, you can pick up this. I mean, the volatility. Well, it's probably gone.
It's gone. A short strangle on earnings, taking advantage of high volatility. It's where you're at right now. You're probably a little nervous early on in the morning when it was coming down in price, but where it is right now, let's take that off at a little bit of a profit. Don't risk it. I no problem with this short string on earnings, as long as your analysis is basically that the gap range will be less than the market expects. It's got to be less than the market expects, and I think I'll do a video on that.
How far out did you go on the strangle? How much time did you put on
$10 say it's December.
Yeah, I mean, I personally be out in like January, February, March on those. I like the high Vega on a short strangle.
Well,
so I go out further in time.
Well, and also, Noah, going out further in time allows you to sell more range. I mean, you're still taking advantage of the volatility crush, even if you go out to January. But instead of selling what would that be? Instead of selling, say, a 2.5 point range in December, you're selling a 5 point range in January. And I know it's probably more than it is, but it allows you to still take advantage of the volatility crush coming out of earnings. But in terms of, but you get more range, so it's a little safer, Ken.
Yep. Further out in a higher Vega, so you could potentially make a little bit of coin off of that.
Yeah.
So.
Yeah, just 1 to 2 months, Ken, is typically the standard. Yeah, awesome, Ken.
I have no standards.
Yeah, me either. Did you guys
hey,
enjoy?
Ken's on the internet. That sounds awesome.
Oh, he's been doing this the whole podcast, Noah. He pulled up some.
I'm thinking Ken's on the internet like the best thing out there. Oh, that dog with eyebrows! I totally put eyebrows on my girlfriend's dog, and it took her a few minutes to figure it out. It was pretty funny.
All you have to do to get us off point is show a cat video. This is insane. Just get back on point. I'm kidding, guys.
Well, no, I think we're gonna wrap it up. Final thoughts.
Let me ask a couple questions to the group real quick. Did you guys enjoy the live podcast? You want to do more of them? Awesome.
I like the names I'm seeing in here. I'm loving. I mean, Senor Huang, Paul. We got a good group here.
Yeah. Well, guys, if you like it and you want to see more of it, let's. We're definitely going to do more of them. We'll plan them out a little better. Instead of 2 hours before we decided to do it, we'll put it on the schedule over there at www.tackletrading.com and pass the good word of tackle trading to the people that might be interested in it. If you like the podcast, ladies and gentlemen, get out there on iTunes and give us a nice ranking if you don't mind. Help us push that podcast. Guys, I just want to say one last thing publicly, and then I'll turn it over to Tim and Noah. I'm extremely thankful for everybody at Tackle Trading and what they have participating and helping us build that and putting it out there for everybody. I'm just extremely thankful that we're able to get that out there to the populace, and we look to build that thing to extreme levels, ladies and gentlemen. So thank you very much from the bottom of my heart, and have an absolutely fantastic Thanksgiving and safe travels. And Dino, don't party too hard, brother.
Yeah, and Matt, I appreciate you very much. I really do. You're my brother, you're my trading partner, you're my business partner. It's tremendous doing this podcast with you. But we wouldn't even be here if it wasn't for these guys showing up and wanting to be a part of it, guys. So I want to thank you guys as well. If you have requests for us, hit us up on Twitter. Follow us on Twitter. We actually need more followers on the @Tackle Trading. Gina was telling me that we need to get that up over 1,000 followers for us to do some things there from a marketing standpoint. So go hit up @tackletrading.com or on Twitter. And Noah, I think you've got a Twitter that you use as well, right? Or do you do the Tackle Trading Twitter?
I've been doing the Tackle Trading Twitter. I've got a @RemD Twitter handle that I use, but I honestly can't remember if I've got that right or not. But I'm learning the Twitter. It's a new thing for me, and so although I've traded the stock, I have not sent out many tweets.
Right.
I'm
Any
sorry,
last
that's
thoughts
a-
from you, Noah? No, what are you doing for the holiday? You got big plans?
I am going up to Keystone, Colorado for some skiing, a little bit of powder. They got 4 feet of snow, so I am spending time with the ones I love. You know, this is my favorite holiday of the year, Thanksgiving, because it's the one time a year we kind of stop and reflect and really think about what matters most. You know, the reason we pursue financial education and trading education, I think, is ultimately for the goal of creating free time for ourselves, because time is our greatest commodity. And we are all fate negative. It's, life's short. We're all running out of time, and I think it's the most valuable commodity we have. So I would encourage everybody to turn their phones off on for a few hours on Thanksgiving, and ignore the smartphone, ignore the Facebook, ignore all those things that keep us distracted from the ones we love all the time, and focus and see if we can carry on a conversation still. So
I gotta get you up on a mountain sometime, my friend. We have to go camping or fishing or something. I think that you and I would really enjoy doing that together, knowing that you enjoy getting outside and turn the phone off. I'm with you. A lot of times we do get too connected to technology. Holiday's a good thing it's a chance to spend time with family, go back and see people and whatnot. I'm happy to hear you going out and doing that. And do you know who we're looking at here, Noah?
Yeah, of course. Same thing we're going to do every night. Pinky and the Brain, only perhaps.
Matt, I got your song right here. Oh, I got it. I'll probably have to capture it and do it. I'll tweet it out. Pinky and the Brain was one of my favorite cartoons growing up, and so trying to take over the world, that's something I got to get a T-shirt or something. Yeah, and I'll give you guys one of my Thanksgiving traditions, though. So Noah, before you turn your phone off, get rid of technology, go listen to the song Alice's Restaurant by Arlo Guthrie. It's like 20 minutes long. It's a Thanksgiving tradition for me. It's a 60s folk song. It's funny. It is a really good one. I listen to it every Thanksgiving. So if you've never, I don't know if you guys know that. No, do you know that song?
I'm not familiar with it, so I'll have to add it to my repertoire.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.